Good day, my wonderful dear students. I am still Mr. Olale Benishola, your commerce teacher. Welcome to another exciting lesson. This educational video is once again brought to you by Igota Virtual Learning. Today, we will be exploring furthermore part of the important topics in the WAEC commerce syllabus. We are going into reinsurance and method of raising funds by companies. Now, this topic is very crucial for understanding how insurance companies manage large risk and how businesses raise capital for their operations and expansion in Nigeria's growing economy. Now, these concepts are becoming increasingly important. Moving on to our lesson objectives for today. What are the things that we want to achieve? Now, by the end of this lesson, you'll be able to 1. Explain the meaning and purpose of reinsurance. 2. You'll be able to identify and describe the key functions of reinsurance. 3. Distinguish between different methods companies use to raise funds, including offer for sale, offer for subscription, right issue, private placement, and issue by tender. And the last one, which is number 4, we'll be able to apply whatever knowledge we have gathered today to real life scenarios and practice WAEC questions. Let us start with the meaning of reinsurance. What actually is reinsurance? Now, reinsurance is often referred to as insurance for insurance companies. Now, it is the practice where an insurance company known as ceding company transfers portions of its risk portfolio to another insurance company known as reinsurer to reduce the likelihood of paying a large obligation resulting from an insurance claim. Now, with what we have here now is like an insurance company like creating a kind of insurance portfolio with another insurance company. Now, this one is to reduce the amount of risk that will be incurred by the client's insurance company. To further put it in a very simple way, we can also say that reinsurance is when one insurance company buys insurance from another insurance company. Let me give an example now. In real life now, imagine NECO insurance company in Nigeria issues a 500 million naira life insurance policy to the CEO of a major corporation. Now, rather than bearing all the risk, NECO may reinsure 300 million naira of that risk with Africa Reinsurance Corporation, thereby transferring part of the risk. Now, what we have here is that a CEO of a Nigerian company, they are create a kind of an insurance with NECO insurance company, NECO insurance in Nigeria. That is 500 million naira life insurance policy. That is what the CEO of a major corporation has with NECO. Now, NECO look at that, with the fact that 5 million naira might be much for them to bear, decide to create a 2 ways, like they will not be the only one to bear the risk of this 500 million naira. They decide to give another company, which is Africa Reinsurance Corporation, part of the 5 million naira insurance policy to Africa Insurance. That is 300 million naira risk of part of the policy created by the CEO of the major corporation. Now, what actually are the purpose of reinsurance? Now, the main purpose of reinsurance are 1. Risk spreading. Now, reinsurance allows insurance companies to spread large risk among several other insurers. For example, if Leadway Assurance assures the Dangote refinery for 10 billion naira, it might be too risky for one company to bear the large amount of money. Through reinsurance, they can spread the risk across major other reinsurance companies globally or locally. Number 2, increasing capacity. Now, reinsurance enables insurance companies to accept larger risk than their capital would normally allow. Now, without reinsurance, a company in Nigeria like Name Insurance might only be able to insure property up to 5 million naira. Now, with reinsurance arrangement, they can insure properties worth billions of naira. Number 3, we have financial stability. Now, reinsurance provides financial stability by protecting against catastrophic losses. Now, when floods affect multiple states in Nigeria, let us go back to year 2022. Insurance companies will proper reinsurance arrangements could handle the surge in claims without going bankrupt. Number 4, expertise access. Now, reinsurers often provide technical assistance and specialized knowledge. For instance, when Nigeria Insurance began offering cyber insurance policy, they rely on international reinsurance expertise to properly assess and price this new risk. Functions of reinsurance. Reinsurance serves several important functions in the insurance industry. Number 1, we have capital relief. Now, reinsurance allow insurance to reduce the amount of capital they need to set aside for potential claim. For example, if custodian and allied insurance has 1 billion naira in policy but has reinsured 40% of its risk, it might only need to keep 600 million naira in reserve instead of the full 1 billion naira. Function number 2, we have portfolio stabilization. Reinsurance helps to smooth out fluctuation in an insurance claim experience from year to year. For instance, if mutual benefit assurance experience unusual high claims in 1 year due to multiple tanker explosion on the Lagos-Ibadan Expressway, now reinsurance helps to absorb these unexpected losses, ensuring the company remains stable. Function number 3, catastrophic protection. Now, reinsurance provide protection against multiple losses from a single event. When there was a major building collapse in Lagos that affected multiple policy holders, reinsurance helped the primary insurers manage the surge in claim from a single catastrophic event. Function number 4, expansion facilitation. Reinsurance allows insurers to enter new markets or offer new types of insurance. For example, when Cornerstone Insurance wanted to begin offering agricultural insurance to farmers in northern Nigeria, they partnered with reinsurance who had experience in this specialized field. Now, let us talk about ways by which companies can raise funds. Now, companies, including insurance companies, they need capital to operate, expand, and meet regulatory requirements. Now, here are the main methods they are used to raise funds. Number 1, we have offer for sale. Now, this is when existing shares owned by current shareholders, often the founders or early investors, are sold to the public. For example, when Aliko Dangote wanted to reduce his ownership stake in Dangote Cement, he made an offer for sale, selling some of his existing shares to the public through the Nigeria Stock Exchange market. Now, what are the key functions, the key features to this? There's no new shares to create. Money goes to existing shareholders, not the company. Now, it is often used when founders want to cash out partially. And it requires a prospectus detailing the company's financial position. But what are the process? Number 1, company appoints issuing houses, that is investment banks. Number 2, existing shares are offered to the public. Number 3, applications are received and shares are allotted. And number 4, trading begins on the stock exchange market floor. What is the second one on the list? That is offer for subscription. Now, this involves the creation of new shares that are offered directly to the public by the company. For instance, when Access Bank wanted to expand its operation across Africa, it made an offer for subscription, creating new shares and selling them directly to the public to raise fresh capital. Now, the key features include new shares are created and issued, money raised goes directly to the company. These are used when company needs fresh capital. Now, the process include the company determine how much capital it needs, new shares are created and priced, offer is made to the public through a prospectus, and applications are received, shares are allotted equally. Right to issue, that's the third one. Now, this is an offer of new shares made to existing shareholders in proportion to their current holdings. Now, for example, when Guaranty Trust Bank needed additional capital to meet new banking regulation, it offered existing shareholders the right to buy new shares for every 8 shares they already own at a discounted price. Now, these are only offered to existing shareholders, usually priced as a discount to the market price. Now, shareholders have the opinion and options to buy or sell their rights. Now, this also preserves proportional ownership if all shareholders participate. Now, the process includes company announce rights ratio, that is 1 share for every shareholders. Record date is established to determine eligible shareholders. Now, rights are issued typically at a discount, and shareholders can exercise, sell, or let their rights to expire. It is time for us to practice another WAEC question. Now, to practice this WAEC question on reinsurance and method of raising funds, this question will help you certainly to understand the examination pattern and improve your problem-solving skills. For each question, I encourage you to pause the video, attempt the question yourself, and then resume to check your answers whether you are right or wrong. Question number 1, this one is coming from 2018. Let's go. The practice where an insurance company transfers portions of its risk portfolio to another insurance company is known as option A, double insurance, option B, co-insurance, option C, reinsurance, and option D, over insurance. Think before you choose your answer. The correct answer is C, that is reinsurance. Let me explain. Now, reinsurance is exactly this practice where one insurance company transfer part of its risk to another insurance company. Double insurance that is option A, is when the same risk is insured with multiple insurance. Co-insurance, that is option B, is where multiple insurers share a risk from the beginning. Now, over insurance, that is option D, is insuring property for more than its actual value. Question number 2, this one is coming from year 2017. Let's go. Which of the following is not a function of reinsurance? Option A, we have stabilization of loss experience. Option B, protection against catastrophic losses. Option C, settlement of third-party claims. And option D, increased underwriting capacity. Think very well before you choose your answer. The answer for question number 2 is C, that is settlement of third-party claims. Let me explain. Now, settlement of third-party claims is a function of the primary insurer, not the reinsurer. The reinsurer deals with the primary insurer, not with the original policy holder or third parties. Now, option A, B, and D are all legitimate functions of reinsurance. Today, we have explored reinsurance and method of raising funds by companies. Let me take you on a ride. Reinsurance is the practice where an insurance company transfers portion of its risk to another insurance company. We have also gone through the purpose of reinsurance, including risk spreading, increasing capacity, providing financial stability, and assessing expertise advice. We have also gone through the functions of reinsurance, which include capital relief, portfolio stabilization, catastrophe protection, and facilitating expansion. Also, we have also gone through the companies raising funds. Yes, they raise funds through various methods, which includes offer for sale, offer for subscription, rights issues, private placement, and issue by tender. Each method has its unique characteristics and is suitable for different circumstances. This one is coming from 2018. Now, understanding reinsurance is important in Nigeria's context because insurance industry is growing and facing increasing risk from climate change, infrastructure development, and economic expansion. Now, companies like NECO, Leadway, and Custodian use reinsurance to manage their exposure to this risk. Similarly, understanding how companies raise funds help you make informed decision when you see announcements about right issues and public offerings from companies like Dangote, GTB, or MTN. You will understand what this means and their potential impact on the share value. I encourage you to read financial news regularly and pay attention to announcements from insurance companies and listed companies on the Nigeria Stock Exchange market. Now, this will help you see this concept in action in the real world. Thank you for your attention during this lesson on reinsurance and method of raising funds by company. If you have any question or need further clarification, please do not further hesitate to contact me or to contact through Igota virtual learning platform. Further clarification on any of this topic that we have treated before or this present video, please do not hesitate to reach out and keep studying diligently, and I wish you great success in your WAEC examination and beyond. Thank you very much. My name is Reinsurance Ibrahim Benishola. I am your commerce teacher. Stay blessed.